Hi, I'm Dallas Mount with University of Wyoming Extension, and I want to talk to you today about ranch economics. Do you know what activities on your ranch are creating value to your business? Do you know what's generating income? Do you know where the costs are occurring? If you're looking at a standard tax accounting form, you don't. Let me show you the difference. Registration is now open for the 2019 High Plains Ranch Practicum School. Schools in the past have filled up before the registration deadline, so I encourage you to get your registration in early. Check it out at our website, hpranchpracticum.com. Here's what the end of the year books look like for an example ranch we've been using. It's based on a conglomeration of actual ranches. So they had about $332,000 of livestock sales. They purchased a small amount of hay, raised most of their hay, had some salt and mineral protein costs, some veterinary costs, fuel and oil for the whole ranch, some fertilizer for some hay meadows, paid the taxes on the land, paid some taxes on the water, utilities for the houses and the operations, had a small amount of paid labor and supplies, trucking, marketing, some purchased bulls. They repaired some equipment, bought one piece of new equipment, and some minor building repairs, put up a shed, and a little bit of fencing and water development, insurances and licenses, and then had some training expenses and dues that they paid to organizations. So their total costs were 303,000 against that livestock sales of 332, left them $29,000 over. And this has got two employees working full time, two family employees working full time, and no family living draw is shown in here. So how do you think this ranch is doing? Well, with that amount of money left over at the end, with no family living draw in there, things are pretty tough. So what's going on inside this business? Well, if you're looking at these numbers, you really don't know. So let me tell you about the example ranch that we use in class. We call it the Lug Nut Ranch. It's a two families on the ranch, so there's a senior generation and a younger generation. The ranch runs cows. The ranch puts up hay, and the ranch develops its own heifers in kind of a heifer development stocker program. So let's break this ranch down into the businesses that are actually going on inside of it. There's the cow calf business, which is the major part of the business. A lot of moving parts there. There's the haymaking enterprises. So we take some forage, we roll it up into hay, and we choose to feed that hay mostly to our own cattle. There's a heifer development business. So this ranch has taken the option of developing their own heifer calves. So we take those female calves at weaning time, and for a year we run them in a different program, and we turn them into bred heifers. And then there's also the land business. This ranch happens to own most of the land that it runs on. It could lease that land out and take an income for that, but that land business also has costs associated with it, from land taxes to infrastructure development to improvements. Those kind of things are associated with that land business. So let's look at the economics of this ranch. In 2018, this is what the ranch has done when we break these down. The land business, if we did nothing but lease it out, it had $141,000 of value that it created, but there's costs associated with maintaining that infrastructure of about $90,000. So if this ranch did nothing else but lease the grass out, the ranch would have made 50,000 bucks. Cows. Well, we chose to run cows this year, and we had $206,000 of value created by running those cows. The total cost of doing that were $275,000. So this year the ranch went backwards 70,000 bucks by running their own cows. The heifer development worked out well. We took those weaned heifer calves, we valued them at weaning time. We turned some of them into bred heifers, some of them into open heifers, and the total value we created by doing that was 109,000. Total cost of doing that were 81,000. And then we made hay. Well, we could have bought that hay for $44,000. So that's the value that we created by making hay. The total cost of doing that were 104,000. So we had cost in raising the forage. We had cost in the land that haymaking business was running on. We had the direct cost of putting up the hay, and then we had a lot of overheads associated with that in terms of machinery, repairs, depreciation, all those things. So the total cost of making that hay was 104,000. So by making that hay, we actually went backward 60,000 bucks. So what's going on inside this business? Well, the total gross returns of $501,000. Total cost of doing this business $552,000. We went backwards $51,000. Now worked into here are some economic costs that are not shown on the tax accounting, which mostly account for cash costs. So a little bit of difference there in those numbers. But when you break it down like this, it sure gives a lot more insight as to which parts of the business are creating value and which parts are not. So if you're just looking at a standard tax accounting sheet, you really don't know. You need to break that business down and see where are the costs occurring and where is value being created. And in answering that, you'll find opportunities to make changes for the business that can be pretty substantial changes. For a business the size of the Lugnut Ranch, it would not be unusual at all to find $50,000 or $100,000 worth of value in some key changes and key focus areas for management. We teach you how to do this at the Ranch Practicum School. We invite you to come be a part of the 2019 High Plains Ranch Practicum School. You can find information on our website, hpranchpracticum.com.